All right, part 3 of the complimentary mini course. And here's where the magic happens. Couple more scenarios and boom, the mini action step. I love this stuff. This is so much fun. Okay, so let's say you earn some income. Yay, you sold a cup of coffee for $3. So here's the sale. Notice the cost of the beans was for $2 and the sale was for $3. Just checking you're making a profit. So now it's going to be 15 equals 7 plus 8. Why? Because if the customer will pay you later, that's a debit because accounts receivable is an asset. Or cash, if they pay you cash, then the customer pays cash, you're increasing an asset, either cash or accounts receivable. It's an increase, it's a debit. And you're going to credit revenue. Why is revenue a credit? Because it increases equity, like we discussed. So assets are for sure increased, left side, debit, $3, while equity increases 3. Now we started with 12 equals 7 plus 5, and then now we're up to 15 equals 7 plus 8. Got it? Good. Okay, next case. Let's say you buy equipment, like a coffee machine, for $2. So either everything's going to stay the same, or it's going to be 14 equals 9 plus 5. Because you're going to debit equipment, assets are up from 12 to 14. You bought an asset, you're increasing that asset. Now, either you're going to pay cash for it, and assets are right back down to $12. Or accounts payable if you pay later, so liabilities are up. So if you're paying immediately, cash right back down. If you're paying later, liability up. So assets are definitely up $2, and you can either knock it right back down if you pay with cash, or increase liability if you pay later. So side note, why didn't we hit an expense when we bought the equipment? Because expenses are for day-to-day short-term stuff like rent, salaries. When you buy equipment, it's not an expense, it's a long-term investment. So we started with 12 equals 7 plus 5. Now it depends. If we paid cash, we're right back where we started, 12 equals 7 plus 5. If you bought it on account, you're going to pay later, it's going to be 14 equals 9 plus 5, okay, due to the equipment and liabilities increase. All right, one more case. Here we go. Let's say you invest in your company. You gave the coffee shop $2 from your own money. So now it's 14 equals 7 plus 7. Why? Because cash is going to be up. Assets are up from 12 to 14. Cash increases as you receive money from yourself, the investor, and you're going to credit something called common stock, equity, up $2 from 5 to 7. This is the investment in the company, which increases equity. So assets are up and equity is up. We started with 12 equals 7 plus 5, and we're going to end up here with this transaction, 14 equals 7 plus 7. Either way, it has to balance, be it for expenses, revenues, buying equipment, or investment in the company. Assets equals liabilities plus equity.